Most people are giving to charity very inefficiently and are missing out on tax saving opportunities. A donor advised fund can help with that, which is exactly what I'm going to talk about in today's video. I'm going to show you why using a donor advised fund might make sense for you in your situation if you're charitably inclined. I'm a certified financial planner, and this is exactly how I use these types of accounts with my clients in the real world, and I've done several of these this year, already using the bunching strategy that we'll talk about, so stay with me. To start, I think it's important to understand what exactly a donor advised fund is. Then we'll dive into how it works, what to fund it with, and go over a simple example of how powerful a donor advised can be when you're using the bunching strategy. And at the end, I'll touch on a few pitfalls and things to look out for as well. So what is a donor advised fund? It's a charitable account that you set up through any custodian out there. The big ones, Schwab, Fidelity, Vanguard, there's a ton of different ways and a ton of different options out there to use. They're normally relatively easy to establish. Usually it's just an online application. Once it's funded with cash, stocks, or other eligible securities or assets, you can then recommend grants to 501c3s from that donor advised fund. And so why use the donor advised fund instead of just giving cash, which you might be doing already? Well, there's two main reasons. Number one is simplicity in my book. Instead of keeping track of all the contributions you make throughout the year, especially if you're making small contributions relatively frequently, you just keep track of one. It's the contribution to the donor advised fund, and then from there you can make out a million different grants if you wanted to the various organizations that you are giving your resources to. Number two is the tax benefits. You can donate highly appreciated stock, which is what I deal with most often, and you can avoid paying capital gains on those donated securities. You can still get the full deduction of the fair market value of those stocks or whatever you contributed, as long as you're an itemized filer. Your donation can grow tax-free inside the account if you choose to invest within the donor advised fund. And you can also bunch several years worth of giving into 1 year to, maybe this helps you exceed the standard deduction and become an itemized filer, but you can bunch several years into one contribution, which can help when you're taking a step back and looking at some multi-year tax planning opportunities. All right, let's dive into an example. Let's say we're looking at a married couple who donates $10,000 per year to charity. They're currently doing it with cash. We're going to look at what a bunching strategy would look like for them. Just so you know, standard deduction this year, the normal standard deduction is $30,000 for 2025 for a married couple. So your charitable contributions don't necessarily help you all that much tax-wise unless you're an itemized filer and you exceed that $30,000 threshold. Okay, these are all just general things here, but since they don't meet that $30,000 threshold, even with that $10,000 a year of contributions, what if they use the bunching strategy? They put, let's say, 5 years worth of giving into a donor advised fund this year. So $50,000 worth of stock into a donor advised fund this year. Now, what would that do? One, it would help avoid the capital gains they have on that stock that they're contributing. They're also going to receive a $50,000 charitable deduction because they're going to push into that itemized filer status. They're still going to be able to do the $10,000 per year because with a donor advised fund, you don't have to make the grants in the year that you make the contribution. You can hold on to that money in the donor advised fund for as long as you'd like. That means the charities are still going to get what they were planning on getting. You, the married couple, gets the deduction. You get to better utilize the assets that you have, and then you get to hold on to your cash for other goals. Maybe you're investing it, paying down debt, whatever it is, but you get to hold on to your cash instead of giving that cash over to the charity. So it's a win-win for the charity and for you. The only one who loses out really is the IRS, which personally, I'm okay with. All right, so a few things to keep in mind before you go about setting up, funding, and utilizing a donor advised fund. First up, contributions are irrevocable. Once you decide to make a donation to the donor advised fund, the money is no longer yours. Yes, you are still in control of where the grants go. You get to choose the charities, you set up beneficiaries or a successor to take over that account if you pass away, but that contribution is irrevocable. That is a charitable gift that you are making when you move money from your personal side of things to the donor advised fund. Another one is if your donor advised fund is large enough to meet the investment minimums, you can invest the balance for future growth. Let's use the $50,000 example. Maybe you're only doing that $10,000 a year. Maybe you're doing $5,000 a year and you pre-funded it with 10 years worth of giving. Well, invest a portion of it or all of it or whatever you decide on and any growth that's in there is tax-free and can be used to give even more to charity down the road. Another point is that there are fees and account minimums and different policies depending on which custodian that you use where you set that account up. So just be aware of that before going in. Also, you can only grant to qualified 501c3 public charities, and you can't receive any goods and services in return. So no tickets, auction items, trips, or things like that. All right, so in conclusion, a donor advised fund isn't the right tool for everyone. It can be a fantastic tool for the right situations, but the main point I want to get across is that do your tax planning, be strategic about your giving. The donor advised fund is a tool for that and can be a great one. If you found this video helpful and you want to see more of this, hit the like button, subscribe to the channel. I post regularly on financial planning strategies for self-employed and business owners. If you have questions about donor advised fund or want to see some more examples, drop a comment below.